Hi everybody, welcome back. Thank you so much for stopping by and spending time with me today. My name is JoJo. For those of you who are new, today's video is going to be me showing you the interest savings that we have had since transitioning to this velocity banking strategy. We implemented the strategy on August 6th of this year, was when we made our first transfer. So for those of you who are not familiar with velocity banking, it's where you use two-way simple interest lines of credit to pay down chunks at a time on the principal on amortized interest loans. So I have a whole series. I'm going to be uploading a video tomorrow. It's the fourth video in my velocity banking series, showing you our numbers, how we implemented this strategy, and really just breaking it down bit by bit. There are a lot of different videos on YouTube discussing velocity banking. The two channels that I really enjoyed watching and learned the most from was the Quack Brothers and Think Wealthy with Mike Adams. And honestly, Think Wealthy with Mike Adams is where I drew most of my inspiration and most of my guidance from on how to crunch the numbers, figure out how best to implement this strategy with what we had going on in our lives. So what I show you guys in this video, I start first here with this accounts tracker, because we use our home equity line of credit and transferred over on August 6th, we transferred over $20,000 from our home equity line of credit. It had a starting balance of $0 in August. We transferred over $20,000 from the home equity line of credit to pay down the principal on my last student loan that I'm paying off. I call it student loan number 2. And it started at like $61,000 in August. So the home equity line of credit principal increased by $20,000, but the student loan principal decreased by $20,000. And the goal of velocity banking is to save money on interest on those amortized interest loans, you guys. So I'm not going to ramble on too much, because if I do have that entire series, I'll leave a link to that playlist in the description box up here, and leave the series videos on the velocity banking series in the description box below if you want to see more about it. But what this video shows is accounts that I house within the home equity line of credit, because interest is accrued, or the principal on that loan is calculated based on the average daily balance for that month. So the lower I can hold that balance down day to day to day during that billing cycle, the least amount of interest I'm going to have to pay. So my goal, what I had done was close, I had my standard checking account, which I do still have open, but I keep as little amount of money in there as possible, and then most of the money is from that checking account was housed within the home equity line of credit. And then I had a sinking fund. That was a second checking account I had within my bank. That has been closed completely. It's fully housed within the home equity line of credit. I have two different savings accounts that are housed within the home equity line of credit. And then this cash flow payment is how I'm keeping track of how much money is being paid towards the actual principal on that $20,000 loan. And the goal of this tracker is, if I needed to pull out all of these accounts, I need to know how much money is in each one of them. I hope that makes sense. But I have a transaction log. I'm going to be going a lot more into detail of all of this in my series, but I have this transaction log that I use to help me track these numbers and my transfers that are happening. It's kind of a very abstract thought. You're just kind of keeping track on this sort of ledger of your accounts. But yeah, if if you have any questions, please leave them in the comments below, or I would refer you to my velocity banking series if this is something you're interested in. But mainly the goal of this video is to show you how much we're saving on interest since doing this strategy. So let's see, for checking, I had ended up transferring in a total of $7,956.43. I had ended up pulling out a total of $3,693.01. The ending balance, after you take this beginning balance of $4,810.72, add this $7,900, subtract this $37-ish hundred, what you're left with is, whoops, make sure I'm using the right pen, $9,074.14. Okay, so next with sinking funds, for those of you who watched my September sinking fund closeout, these numbers will look very familiar because that's this is my sinking funds. They still have the same purpose. All of these accounts still have the same purpose. They're just helping me out by decreasing the amount of interest I'm being charged on that HELOC. Like I'm sick of paying interest on loans, and eventually I'm gonna be debt free. But in the meantime, I wanna save some money because I have already been leaking lots and lots of money over the years. And I'm wanting to kind of get creative on how can I save money with the resources that I have. Okay, so then my savings, that gets its contribution of $50 every month. Nothing came out. It has its ending balance of $1,350. And then savings 2, it has its contribution of $300. I did have to pull some money from here. If you watched my Paycheck 2 closeout video yesterday, or my week 3 check-in, I really discussed more about this, but we did have to dip into the savings. So it is at $1,200. And cash flow, so what's actually has been paid down on that $20,000 principal, and this takes into account the principal payment that comes from the minimum payment and the cash flow extra money that we're throwing at this debt focus, because our home equity line of credit is our debt focus currently. And for September, it was $2,095.84. And obviously nothing came out for that. So total, what we've paid off is $2,821.61. For those of you who watched my Paycheck 2 budget closeout video yesterday, that's not a reflection of that $1,800 cash flow payment. Let's see, so then interest that I paid for this month, I have like a $52 payment, I think, coming up on the home equity line of credit. And the interest that I'm gonna pay for that is going to be, let's see, I'll put that in red, is $28.06. Interest that I've paid overall is $1,447. Oh, no, not even. Oh my gosh, I would die. Okay. Interest that I paid overall so far the last 2 months is $70.69. Okay, and then my HELOC ending balance. Oh, I'm sorry, I forgot to write in these totals, you guys. Okay, so total deposits was $11,398.06. Total withdrawals was $4,649.44. The ending balance was $18,623.46. So if you think of the $20,000, I have $18,000 housed within that HELOC. I'm not being charged interest on $20,000. I'm being charged interest on $1,447.23. And that's the power of housing these accounts. That's why I'm going to all this work to track these accounts and keep them in there. Because being charged, it's 5% interest on this account. Being charged 5% interest on $1,400 is a lot less than interest on $20,000. Okay. So that is the tracker, and this is an average daily balance. Obviously, money's been flowing in and out and back and forth quite a bit, but and that's how the principal is calculated on my home equity line of credit. It's an average daily balance. So it's not been the last 30 days of the billing cycle hasn't been $1,447.23, but at least for most of it, it was. So that's why it was such a small amount of interest. Now what I'm going to do is to switch you guys over to my Excel spreadsheet where I'm tracking my interest savings. All right, everyone, here we are at my Excel spreadsheet where I track my interest savings. And I have two tables. The first table, the one with the yellow, is the standard snowball table. And that's where there's more like hypothetical numbers. If we had been using or continued with the standard snowball method of throwing our cash flow and accumulated minimum payments of paid off past debts and throwing that at student loan number 2, what the numbers would have looked like. And then the blue table is the velocity banking strategy that we have actually implemented. So I can put in real numbers for that table. And on the right hand side, the green is showing the interest savings, and then the dark blue is total overall once we are done paying off this loan. I've hidden some of the other months just because I noticed when I was editing the last video it was very busy and I wanted to make sure you guys could see all the nitty-gritty details. What we're going to be doing today is updating the snowball payment, what the actual snowball payment was for September, and that is $2,047.22. Put that in here. 47.22. Now that was applied on the 10th of October. And this September, so the billing cycle, I've had that more be a reflection for October's amount, just because of how the billing cycles are with the loan company. So when I plugged in those numbers for our snowball, you'll see that the formula automatically updated October's balance on the loan, and that'll be a reflection on the interest for that billing cycle, because October is more a reflection of September when you think of loans. Okay, now we'll come down here, and the actual interest that we paid for the month of September on the student loan, can go ahead and update that. It was $158.88, and the interest that we paid on the HELOC was $28.06. So you can see over here this dollar difference because of my predicted numbers were skewed when I first put this together. Because of it, I didn't have the HELOC percent actual numbers or the snowball actual numbers. but you can see we still have an interest savings of about $88 just after implementing this strategy for 2 months. And this is going to take us at least a year to pay off. So if I'm saving almost $90 just after 2 months, and if my potential savings are anywhere near this $800, then I am all for it. But that is going to wrap up this video, you guys, and I will be doing my Velocity Banking Series 4 video tomorrow. We're going to be looking at cash flow index. If you guys enjoyed this video, please give it a thumbs up. If you're enjoying the contents of the channel, please consider subscribing and follow along with us on this debt-free journey. I'll see you tomorrow.